A MAPT is designed to hold the grantor's owner assets in order for the grantor to qualify for Medicaid benefits after the 5-year look-back period has expired. Will a residence held by the MAPT qualify for the lifetime exclusion of gain? To get the lifetime exclusion of gain for the residence when it is sold during the grantor's lifetime, the trust must be a grantor trust. In addition, grantor trust status could preserve state exemptions and homestead rights. Who reports the income if the MAPT is a grantor trust, but income is distributed to the lifetime beneficiaries? If the MAPT is a grantor trust, then all income, regardless of who receives the income or whether the income is accumulated in the trust, is treated as if it had been received directly by the grantor. But won't Medicaid count the income from the MAPT if it's a grantor trust? If the grantor is an income beneficiary, yes. But if the grantor is not an income beneficiary, then the phantom income reported in a 1040 would not be reported to Medicaid, as the income was not received by the grantor. If the residence has a loan against it, can the bank call the loan? Not if you retain the right of occupancy. Under the Garn St. Germain Act, the bank cannot exercise a due on sale clause upon a transfer into an inter vivos trust in which the borrower is and remains a beneficiary and which does not relate to a transfer of rights of occupancy in the property. Why would I want the trust assets to be included in the grantor's estate at death? If the assets are includable in the grantor's estate, then the assets qualify for a step-up in basis. While this is generally desirable, if the estate is subject to estate tax, then you will need to decide which is more desirable, the basis increase or the avoidance of estate tax. What if a beneficiary uses the income for the grantor's benefit and there's nothing left to pay the tax liability at tax time? Can principal be distributed to satisfy the tax liability? It depends. If you are using a lifetime distribution trustee, then yes, the distribution trustee would have discretion to distribute principal to the lifetime beneficiaries. Likewise, even without a lifetime distribution trustee, if you selected a discretionary distribution standard, then the trustee would have discretion to distribute principal to the lifetime beneficiaries. Will the grantor recognize capital gains upon funding the MAPT? No. Capital gains are recognized upon the sale or exchange of a capital asset. When a capital asset is transferred to the trust, whether it's a grantor trust or a non-grantor trust, nothing is received in exchange for the transferred property, it's a gift, so there's no capital gain, and the trust inherits the grantor's basis in the property. However, of course, if an asset is liquidated before the transfer, then such a liquidation is a separate transaction from the transfer to the trust, and the money received in exchange for the capital asset upon liquidation is capital gains. Who pays the carrying costs of the residence? When the grantor retains the right to reside in the residence, then the trust requires the grantor to pay the expenses of maintaining the residence. But when the grantor does not retain the right to reside in the residence, the trustee is authorized to pay the carrying costs.